followed by pound.
The Africa Oil conference call, which was held Wednesday, March 11th, 2015 at 11 a.m. Eastern Time, hosted by Mr. Keith Hill. You may press 2 at any time during this recording for a detailed help menu. Good morning, ladies and gentlemen. Welcome to the Africa Oil Operations Update conference call. I would now like to turn the meeting over to Mr. Keith Hill, President and CEO. Please go ahead, Mr. Hill.
All right, thanks, Mark. Welcome, everyone. I'd like to also introduce the other people we have on the line. I've got Nick Walker, our Chief Operating Officer. I've got Ian Gibbs, our Chief Financial Officer, and I also have Paul Martinez, our Vice President of Exploration. So I'll start with a few introductory remarks, and then we'll go to question and answer. We do have a new corporate presentation, which has been posted to the website, which some of you may want to follow along during the discussions. So I guess starting off, I think we'll start with the extended well test. I think those are probably the most interesting thing I find in the recent update. You know, our rates are obviously far above expectations. In fact, all of the zones there naturally flowed, which is something we've only seen a couple of times in the past on recent tests. And I think that's not by coincidence. I think a lot of this is due to the fact that we are really improving our drilling and completion practices. So these wells have been drilled with oil-based mud, had very little damage during drilling, and then we've also upgraded our completion practices so that we don't see further damage during the completion technique. So hopefully this is a trend that's going to continue. We're going to be completing all the wells for the Gambia extended well test, and we believe we'll see the same type of rates out of that as well. We are also encouraged that we've seen some pressure response even in these very short cleanup tests from Amosing. We actually are able to see some pressure response in the monitoring well as we test these wells, so that gives a good idea of reservoir connectivity. In the Gambia wells, we've got most of those wells drilled. We may drill one more well for the extended well test, but the wells we have drilled, we've been able to show pressure communication over very large areas. So it looks like there's some very well-defined pools there, again, giving good evidence of the reservoir communication and reservoir quality. So again, it is early days. We have a lot of work to do on these extended well tests. We're going to be flowing them. We're going to be doing injectivity tests, but I'd say so far the results we've seen are giving us a lot of optimism that these reservoirs may even be better than what we had thought originally. And I think we're particularly impressed because I think, as we've talked about in previous calls, I think this is one of the issues that we've had with several of the companies that we've talked to kind of on a preliminary basis about being partners with us. I think they're concerned about the reservoir and improving the reservoir. There were people that we talked to, in fact, a large super major that didn't think these wells would flow at all, even on pump. And I think now we can go back with some hard concrete information and demonstrate that to them. But in their defense, these are not easy reservoirs. You know, the conventional log analysis is hampered by two things. One, these are not pure clean sands. There are shales and shale minerals within the sands, which make petrophysics a little difficult. And particularly, the most important thing is the very fresh water that's contained within these sands. So I realize most of you on the call are not petrophysicists, but how you measure saturation of water is really because the difference in resistivity between water and oil. Generally, saline formation water has a much lower resistivity than oil, and that's how you can tell water from oil and water saturations, which is a very key component in many things. And the way to attack that is really by doing core analysis. So you'll see in our release we talk a bit about our core analysis, and there's a page in the presentation that shows a picture of the Gambia 3 core where we're seeing very good permeabilities and very low water saturations in the 20 to to 35% range. So I think I think all of that is, again, early days, but what we're seeing so far is encouraging that we are going to see reservoir parameters that fit with what our preconceived notions are. So again, we've got 1,100 meters of core to analyze, so there will be a steady flow of core data coming in. But I'd say we're quite encouraged by what we've seen so far. And I think again, for the non-reservoir engineers, saturation of water is important for many things. Number one, it's a direct multiplier of oil in place. So the more water you've got in the pores, the less oil you've got in the pores. So if we can prove that there's more oil in the pores, our oil in place number will go up. It also has an effect on the recovery factor calculations. It also has an effect on the overall productivity of the wells. So it is an important thing, and I think we will be continuing to get data on that. But again, early encouragement is there. I think the next thing, we talk a little bit about in the release, and one that I think is an important issue probably behind those two. I think those are probably our two key issues that we're attacking this year. But also there are some government issues. This whole project is very dependent on the export pipeline, and in fact, it is the rate-limiting factor of us being able to move this project to development. So I think we've seen a very high level of engagement between both the Uganda and Kenya host governments, also the Uganda and Kenya joint venture partners, and the Kenyan government has basically appointed an advisor, and they've advised us that they will be making a final decision and recommendation by the end of the second quarter. So I think we're on track for that, and I think that's an important milestone for the group and for the project to move forward. Also has been a lot of press about the capital gains tax, which came upon us last year and caused a lot of consternation both with ourselves and our investors. And there's a lot of buzz in the Kenyan media and a lot of government officials of Kenya who've come out against this high corporate capital gains tax. And I think there's a very good chance that by mid-year and third quarter, we'll see a reduction or even possibly an elimination of this capital gains tax. So I think those issues are moving along well. I've had a lot of people talk to me about the fundraising recently, and I think I've had both sides of the equation saying, did we raise too much or too little? And I think there is no perfect answer to that, but what we intended to do was raise enough money to really keep this project moving forward, to answer the key questions that I've already talked about reservoir, about resources, about the deliverability of the wells, and really get this thing in a position where we can submit a field development plan by the end of 2015. So I think the tough part of this, of course, as we talked about in our last call, is that at today's share price, it's very dilutive to go out and raise money. So we were cautious about raising any more than we absolutely needed. We settled on the 125 million mark. We were oversubscribed. We could have raised significantly more, but I think from our standpoint, we thought this was the right amount of money to keep the project moving forward, but to limit the dilution. So going forward, obviously, this isn't going to take us to field development. There will have to be a funding event going forward. Our number one preferred course is still to bring in an industry partner, and all of the things we're doing that I just talked about are things that are going to be very positive to be able to bring in an industry partner. The one I didn't talk about, which is probably the most important one, is oil price. This is not a seller's market right now. This is a buyer's market. And I think, our idea is we keep our head down, we keep adding value to the fields, and then when the turnaround happens, and I think everyone I've talked to agrees that there will be a turnaround, that yes, there is a slight oversupply in the market right now, but with everyone cutting their budgets, with the drilling, 45% of the drilling rigs laid down in the United States, eventually there will be a supply side reaction. Whether it's a quarter from now or 2 quarters from now, there's a lot of debate. Of course, if our friends in Saudi Arabia decide they want that to happen, that could be 2 weeks from now. But I think the bottom line is that we just want to keep our flexibility going forward until we see a number of things. It's not just oil price. It's overall market conditions. It's the status of the pipeline. It's the status of our appraisal and the extended well test results. And I think keeping the second half of 2015 flexible is a real key till we see how all of these things develop. But again, it seems as though the majority of these things are developing in a positive way, and I think still kind of third quarter is the time that I have in my mind that would be an optimum time to go out and look for a partner, particularly, of course, if oil prices start showing significant signs of improvement by then. So the last subject I want to talk about is exploration. I mean, obviously the Ngoma well was a bit of a disappointment to us. I think we've drilled a number of wells now in basin opening wells, and we've had encouragement in quite a number of these wells. We've seen in the Cario Basin, we've seen good oil shows both in the Apir and the Kodos well. We drilled earlier up in the West Turkana Basin up in Ethiopia and the Sabisa and Tatule wells, and we saw a nice thick shale section. We saw oil shows. In Gomo, we basically saw a fairly thick sand package with very minor shales in it. We did see a shale at the bottom of the well, which we've taken samples of in sidewall cores, which could be a potential source rock, but of course we won't know until we see the results of that. So I think, while we're discouraged, we haven't made a big success discovery in one of these new basin opening wells. We have seen a lot of encouragement, and we are, with our partner Tullow, committed to moving forward to assimilate this data and keep exploring these frontier basins because they still have a huge amount of upside. And I think just need to keep in context that this is an area of the North size, the area the size of the North Sea to explore, and most of these wells were the first wells in the basin. So we've learned an awful lot from these. We are seeing encouragement that will give us incentive to move forward, but I think we're having to make some decisions now based on budget constraints that we think spending our money moving the Lokochar Basin forward is probably a better use of our funds at this time. The good news is that many of our exploration blocks, including the north, the Rift Basin area in Ethiopia, where we're shooting seismic right now, we have 7 more years left on that license. On 10BA, we still have 5 years left on that license. So we do have time to explore many of these blocks, and we haven't forgotten about exploration, and we will still focus on it. But I like to mention that it was the 50th well in the North Sea that actually found the first commercial hydrocarbons. Now, technology's moved on since then. Now that we have better seismic and better definition, it's not going to take us 50 wells to find the first oil in the Lokochar or in the East African, Kenyan, Ethiopian Rift system. But it may take us 3 wells in each basin before we really understand where the source rocks, the reservoirs, the traps, the petroleum system could be effective. So, with that, I think that's I think that's a good introduction. I think Mark, we're now at a position we can open the floor for questions.
Thank you. We will now take questions from the telephone lines. If you have a question and are using a speakerphone, please lift your handset before making your selection. Please press star 1 at this time for any questions. You can cancel your question at any time by pressing the pound sign. Our first question is from David Mirzai from SG. Please go ahead.
Hi, Keith. Can you hear me okay?
Now we hear you, David.
Hey. Thanks for taking the question. Can I turn you to slide 24 on your new presentation pack, what you will see in 2015? I just want to get a sense for where the rig is at the moment. You are going to put that down to 1, how it's going to move around your licenses, and exactly what the chances of seeing those last couple of exploration wells this year on Amoshing North and the Cario Valley.
Yeah, maybe I'll hand that one to Nick Walker.
Yeah, David, I wonder whether you're looking at the latest presentation that we posted on our website. But anyway, it's 22 in my pack. But the one that we have on there in terms of, what we're showing is firm wells to around mid-year, and then we've got contingent wells at the end of the year, and we're still assessing what the program would be like towards the end of the year. I think the Kerio Valley well, the checkup well, is a commitment well, and I think in Block 12A, and I think that's pretty certain. The program beyond the middle of the year, we're assessing. We have a number of options, and as we assess the seismic program and get the benefit of the wells we're drilling at the moment, we'll adjust the program, do the wells that are most attractive to us. So we have some choices. Ammersing North is one option, but there are others.
Okay, and just secondly, I know you've probably got a few questions on the line. Just to run me through the timeline in pipeline definition, how the discussions are progressing between the party in Uganda and the route they would like to take versus the route the Kenyans would like them to take. Thanks.
Yeah, I think it's really the northern versus the southern route. So there's a southern route that runs along the existing product import pipeline. And has potentially some advantages of using that right away. And then there's the northern route, which is the Lapsset route, which the Kenyan government has been very keen on for a number of years. We're really at the end of the day, it's a Kenya decision as to the pipeline routing in their country. So we're working closely with them, and we're looking at the comparisons of both of those routes, and they've hired an independent consultant through Toyota Financial, a German company called IPL, who is doing the technical work for them. So that study is supposed to be concluded in April, and part of that will be assessing the relative merits of both of the northern route and the southern route. And then I think the second thing on top of that is really the commercial structure. So they also are looking to hire a commercial advisor to go in and look at who how the ownership of the pipeline will be treated, what the tariff structures and all of that. So we've been assured and we've been involved, and we think that'll be done by June of this year. So I think that's the outcome is still to be decided.
Yeah, can I get that right? You said they are looking to hire someone to come in and look at the commercial structure, and that they will have hired someone by June of this year, or that's the expectation?
No, that the full recommendation would be done by the June of this year. They're looking to hire a commercial advisor right now. They've been out in the market looking for one.
Okay, so route commercialization structure should be settled by June this year.
That's our
Thank
hope.
you kindly. Oh. Thanks very much.
Thank you. The next question is from David Dudlike from Dundee Capital Markets. Please go ahead.
Yeah, good morning all. Very encouraging to see the scale of natural flow at Ammersing, and also the empirical evidence that you published on page 7 on the SW and the core analysis. One thing that I may have forgotten is the variance in porosity that we're seeing across the aerial extent of both Ammersing and Gamia, and obviously that's. Can you perhaps remind me of the gates that you use to basically define net oil pay, and perhaps speak to the variance in porosity that you're seeing across these two fields?
Paul Martinez, you want to handle that one?
Sure. As far as our net pay cutoffs, we use a porosity cutoff of 10%. But as far as average porosities that we're seeing between the two fields, it's very typical to see porosities in the 20 to 28% range, and I believe the average for the Aurora between the two fields is about 23%. There's a difference between total and effective porosities, but as a general just as a general average, 23-24% is a typical average for us.
Okay. And Keith, I think you spoke in your introduction. You spoke to a pressure response at the monitoring well at Ammersing. I presume that was Ammersing 3, and you're seeing a perturbation there during the tests that you carried out at 1 and 2A.
Yeah, it's actually between the 1 and 2A is the when we did the short-term test. We had monitoring in the observation well, but They're fairly close together at the top of the, because one is a sidetrack off of the other. So they're not very far apart from each other at the top of the reservoir. Nick, maybe you can add a little more color on that.
Yeah. So I mean, the only thing that we've done so far, David, is we've cleaned up each of the perforated zones in the well. So we've conducted basically five DSTs in each well, and we started out producing from the 2A well first, and what we've seen is a pressure response in the 1 well, which is up dip. There's too much pressure disturbance to be able to then see a response for 2A from the 1 flowing, so we haven't been able to see that at this stage, but so we've seen from the top 3 zones in 2A, we've seen a response at 1. I mean, I think what it says to us is that, I mean, as Keith points out, they are close together. You can see on the diagram they're only about 300 meters apart at the top of the well. But what it says is that we have very good reservoir quality. What we don't see on the build-ups is any sort of closed boundary system. We do sort of see some boundaries, but only indicative of one boundary. So it's not because it's a small system. It's just because the wells are close by. And what we're going to be doing is, in the longer-term flow, we're going to be flowing from Amosing 1 and measuring the pressure response at Amosing 2A, and we'll flow for longer in some of the zones. For example, zones 4 and 5, we didn't see the connectivity. They're probably bigger zones, as you can see from the representation on the chart on page 5. So there's a lot more data to come from this, and we're really early days on the EWT. The longer-term flow is meant to start around mid-March, and we should see some results from the longer-term flow periods in sometime in the middle of the second quarter.
Okay, and then moving to Gamia, that's a 3-way EWT. There'll be 3 wells completed and doing various individual zone tests. Is that correct?
Yeah, that's. It'll be it's an expansion really of what we're doing at Amosing. If you look at slide 4 in the pack, what you can see is that it'll be. We're going to use the D pad, which hasn't been drilled, but that'll be the next well after Amosing 4 to be drilled. That's going to be the key production well, and then we'll complete 2 of the other 4 wells that we've got in that area between in Gamia 3, 5, and 6 and 7. And we haven't decided exactly how it's going to look, but it's basically we'll clean up to each of the wells just as we've done here at Amosing, and then we'll measure the pressure response. And our view is the response so far from Amosing is excellent results in terms of connectivity, in terms of recovery factor, and we want to prove the same in Gamia. But the static pressure data we have in that eastern flank of the field shows that those 5 wells that we've got already there are connected. So we would expect to see that we will see pressure responses and in the various sands, and we'd also expect to see better flow rates. I think Amosing is one of the wells where we've drilled with good completion practices, good drilling practices, and I think we're hopeful that we'll see similar sort of very positive results when we move our extended well testing to Ngamia.
Okay, and moving to Gamia 7, because that was an important well. So just to confirm, it already lay outside, as I understand it, the 3C boundaries. So we're dealing with prospective resource. And then I'm looking at, on the same slide 4, I'm looking at this dotted white line, which is this estimated oil water content. Is that, I mean, Gamia 7 looks to be about 80, possibly 100 meters down dip from your prior group of Gamia appraisal wells. Is that basically, do I now move down to the oil down to, as indicated by your net pay within the Gamia 7 well? Where does that oil water contact come from? Is that pressure or is that from logs?
Perhaps I could speak to that, David, and Nick, perhaps you please feel free to jump in. But what happened in Ngamia 7 is where we had placed the well, we expected it to come in at a few different pool contacts. And keep in mind that the map that you're looking at is just one pool out of 5 or 6 pools. But at this particular location, this particular pool, first of all, structurally, the well came in about 100 meters higher than expected, and we've gotten the additional column from this particular pool. That's part of it. Also, with the depth correction, this area that's out to the east was higher than expected. So our earlier depth correction had those contours dipping more steeply. Now that we've drilled the well, the structure is pulled up and it's higher, so we get more resources out there. So it is a combination of drilling the well, finding the structure higher, and we also picked up a few additional pools in the well. So it's a bit of both, and these were confirmed both by fluid contacts that we saw on the well and also pressures.
Excellent. So that's a real positive. And then, and I'm hogging the line, just one last thing. I was intrigued by a commentary with regard to, I think it was Ammersing North, and it just slide 12. Ammersing North will test extension of Gambia pools and possible connection to Ammersing field. And is there any static pressure data that would possibly suggest that Gambia and Ammersing are connected? Or am I missing something completely?
Nick, you want to take that?
Well, I think in terms of, Ammersing North, we don't think, from static pressure data that we would see that connected. What we see is a fault compartment on the northern edge of Ammersing, which we couldn't see on the 2D seismic, but now we have the 3D, we're able to map it. And basically the closure maps up dip from the Ngamia field, so we can trace it all the way up dip from Ngamia 1 in a number of pools. And so that's what makes us excited by this location. So, and the
if you look at that seismic line, David, in the package, we can follow that seismic line from the Ngamia well straight up to Ammersing North, and it looks, very continuous, and it's just coming up dip from where we've tested oil at the Ngamia well. So, still working through that a bit. That fault that defines Ammersing North is also fairly well imaged on the 3D. So that would be an area that wouldn't have been counted at all before. So that is an interesting target. We're still discussing with our partner as to when that would be drilled in the sequence, but certainly would be a chance to add some significant new resources if it was successful.
Absolutely. Okay, look, thank you all. I'll leave it there. Thank you again.
All right, thanks, David.
Thank you. The next question is from Rafal Gutaj from Bank of America. Please go ahead.
Yeah, thanks. Hi, guys. So I was just wondering if you could give us a little bit more color on specifically kind of what's giving you confidence that the capital gains tax will be reduced or even potentially eliminated in the second or third quarter of this year. And if that does happen, is the sale of South Lokichar or indeed the whole company back on the cards, or do you still see yourselves now as a development company through to first oil? And then secondly, just on recalibrating your published resource estimates on the back of this appraisal success and potentially a program going forward, when should we expect a new set of numbers in the second half? That's it for me.
Okay, thanks. Yeah, I guess on the first question, one of the reasons we're having hope is really from published reports in the Kenyan press. The capital gains tax has been suspended in Kenya since 1986. So when the capital gains tax was reimposed, it was reimposed at 5% on all industries except the extractive industries. And the extractive industries, oil and mining primarily, was put at 30% for local companies, 37.5% for foreign companies. So since that time, we have a number of allies in the country who want to eliminate capital gains tax, or at least postpone the imposition of capital gains tax for some period of time. So, there is a chance that there will be just an omnibus capital gains tax bill that would basically eliminate or defer capital gains tax for a certain amount of time, and that's getting a lot of traction in the press. As far as the extractive industries, there have been many people, very closely tied in the Kenyan government, very high levels, who have come out publicly stating that they think perhaps that the number that they'd put in was too high and that it would have a negative effect, particularly in light of today's oil prices, in attracting new direct foreign investment into the country. So I think we've obviously been meeting with a number of those people and trying to impress upon them that in these early days of their oil industry and in light of the current world oil market, with capital following the most capital going to the most friendly place there is, that this is probably not a good time to be imposing a difficult new capital gains tax. So again, it'll be up to the Kenyan government. They will do what's best for the country, and that'll be the main decision. But I think we're seeing a lot of momentum. Certainly in talking with government officials and in the press to review that. And if it does get reviewed, it will likely be reviewed in June. Generally, they put the new financial bill for 2016, the Finance Act for 2016 draft to Parliament, and then this year in September it was passed into law for the following year. So I think that's the time frame we're looking at to see if this potentially comes to pass. And I think as far as what we do going forward with the company, I think we've always said we're keeping all options open. Obviously, if there's no capital gain tax or a modest capital gain tax, the possibility of selling the entire company, becomes more plausible. We still are I still personally think probably our best option is to bring in an industry partner, in a farm-in situation where they come in and basically carry us through development, and we keep as high a percentage as we can. That is fairly clear in the current finance bill that will not be subject to capital gains tax. So I think that still is kind of what I would say our preferred option is. But as you stated, we need to be prepared to go through to development. So we are looking at options of how would we finance development. We've talked with several banks about non-recourse project financing. Once the pipeline and the development plan are established, that'll be an opening in market. We're also looking at, I think I've mentioned before, looking at potential mergers with companies that have production and cash flow that could potentially finance our ability to stay in the project. So I think the key point is we're sort of addressing all options at this point, and at the end of the day, it'll be what's the best for the shareholders, which essentially will be what will be the less dilutive to the shareholders. So right now, I still believe the farm-in to a bigger industry partner is probably our preferred option, but I think we have to keep all options open at this point. And the second question.
That was just on the resource update.
Resource update. So
anything. Yep.
Yeah, I think we want to wait and see the Gamia extended well tests and the Amasing extended well tests and see the results of those. We obviously are, as I said, we've got 1,100 meters of core to work through, so I think we want to get a statistically valid sampling of the core data. We will be drilling some more wells this year. Not only the Amasing 4 appraisal wells drilling now. If that one's successful, we may look at drilling a well more up towards the Akosuan well, and there's some big volume potential there. Amasing North. We also are quite excited by what we're seeing in the preliminary seismic up in the Etom area. So there is a slide in the new corporate presentation that shows the Etom 1 well, which was quite an interesting well. It had the best quality reservoir of basically any well we've seen in the basin. That was oil stained throughout, but only a small part of it was trapped. So if you look at that seismic line in the brochure, you can see that we drilled basically right in the middle of a graben with two high blocks on either side. So that's another location we're looking at that could add some significant resource. So I think I would say that we're kind of going to time that resource update to when we think we've got a preponderance of data that's going to give us the best answer, so to speak. But I think if I'm a betting man, I think it'll be sometime in the third quarter of this year.
Okay, great. Thanks a lot.
Thank you. The next question is from James Hosey from Barclays. Please go ahead.
Yeah, good morning, guys. Or sorry, good afternoon. I'm really interested if you could clarify what your capital budget is for this year, and also just maybe an indication of how far the recent equity raise takes you into 2016 without another financing event.
Yeah, I'll sound a little vague on this because we don't have a firm capital budget for the whole year. We're talking with our partner now, and as I said before, we're looking at various alternatives, and there'll be a number of factors which drive us to keep spending money or to possibly curtail spending money in the second half of this year. One of the biggest things is how long do we keep that last rig? Right now we see it going through at least the third quarter, and as shown on the contingent budget, that we potentially will keep that going and drill even the exploration well in 12A. So I think we haven't got a final budget agreed with our partners as of yet for the second half of the year. The philosophy of the fundraising at this point was basically to fund the firm program and have a little money to fund a reduced program in the second half of the year. But I think we don't really have a firm number as to how long this is going to last us and when we would have to go out and raise more money, because I think it's really dependent on a number of things. As we talked about, the pipeline, the results from this, the overall market, how expensive is equity going to be in the second half of the year. I'm hoping it will be much less expensive than it is this year. But also during this time, we will be talking, with industry partners, and again, if we're able to get an industry partner together, industry deal together in the next 3 to 6 months, obviously we wouldn't go raise any more money. That would be part of the deal. Would be they'd be either taking us out or funding us fully going forward. So. Unfortunately, I can't answer. I'm not giving you a very good answer, but because it's not really a determined thing yet. I think the key in current market is remain flexible. And I think the money we raise sees us through what we think is the real core projects to be done, and then sometime in the second or even third quarter, we'll make the decision how much more we want to do this year, depending on how all those previous factors come together.
Okay, maybe asking it slightly different ways. So a decision to release that last rig in the third quarter, is that going to be a decision based on funding, or is it based on the results you get in the next few months from the appraisal campaign?
I think it's a combination of many things. I mean, the pipeline might be one factor that if there still is a lot of uncertainty on the pipeline, that could affect that decision. I think what we'll see is that when we go through the 3D and we see all these attractive prospects, I think we're going to want to keep that rig, and I think we're going to want to fund that rig going forward. And then the real question is, how do we fund it? I mean, I know the market is nervous about funding. I see a lot of our peer group companies, that aren't going to be able to withstand the current storm. As we've said in the past, we are, we have no debt. We have pretty much discretionary spend going forward. I think we've just recently proven that even in very difficult markets, we can raise money. And of course, our ace in the hole is we're part of the Lundin Group, and if things get really dire and we do need money, and we think we're going to spend that money wisely, we always have that card to play. So, of all the things that keep me up at night, financing is not one of the primary ones, but I understand it is a concern in the market.
Thanks very much.
Thank you. The next question is from Brendan Warn from BMO Capital Markets. Please go ahead.
Yeah, thanks, gentlemen. Just one question, if I can just focus on the pipeline. Actually, no, if I can focus on, call it, what you need to see before the FID that your own board would take. And if you can just almost work back from that point, and you may want to use, call it, end 2016 as just sort of rough dates. And it's more external approval. So approvals, either commercial arrangements from government or other parties that you don't have direct influence over. Just so I'm quite clear on what needs to be, call it, ticked off or achieved for your board to be able to go to that FID. And just a follow-up question, actually, on that funding point, just what's your cash burn rate, perhaps first quarter, second quarter, and whether and if I'm looking at the right slide pack on slide 22, just the hashed contingent wells are funded from third quarter. Actually, this is more than one question. Just the last question I guess I have. Apologies, Keith. I guess in terms of like the resource estimate, I mean, typically you would need a resource estimate to define your pipeline sizing, but you say the resource estimate is going to be published third quarter. Are we expecting to see then pipeline definition post that announcement?
Well, maybe I'll take the first and the last kind of together as one question, the pipeline questions. So, you know, what we want to see, the first thing we want to see is basically a decision made on the routing, because that's going to, we have about a year's work to do once we have the routing. We have to do a detailed route survey. We have to do detailed engineering. We have to do an environmental social impact assessment. You know, it's going to take us about a year to do the really detailed engineering and environmental work to get that pipeline in order. So ideally, that would come towards the middle of 2015. Middle of 2016, finishing that study. In parallel with that, of course, we've got all the commercial arrangements. We have commercial arrangements with the government over tariffs, over cost recovery under the PSC, under guarantees. During that time, we'll also be looking at financeability, meeting with banks and then looking at the commercial structure and who's going to own the pipeline. Is it going to be the upstream partners primarily? Is it going to be the Kenyan government? So I think all of those things will be going on in parallel, again, with the idea that by the middle of 2015 or 2016, we would have all of those answers. As far as the size of the pipeline, we don't have to make that decision literally until the day before we order the steel. So during that time, we also will be, of course, upgrading our resources. You know, it's not just finding new resources. It's actually taking 2C, which will eventually become 2P, and turn them into 1C, which will eventually come proven, because that's the bankable part of the development. So obviously, we want to maximize the proven resources as well, because that's going to directly relate to our ability to bank finance a portion of this project. So I think all of those things on the pipeline are going to have to be done in parallel, but they really can't kick off until A, we've got the routing, and B, as soon as possible, getting the commercial structure worked out so we can start actively engaging on the financing part as well. So as far as the burn rate, again, the burn rate is rapidly going down. We are releasing rigs. We started the year with 4 rigs. We've released 1 already. We've got 2 more that will be released by the end of the second quarter. In fact, we're releasing a second one right now. So we will by the end of the second quarter for sure, probably sometime mid-second quarter, we'll be down to 1 rig. So the burn rate will be going down proportionally through that time. It's kind of hard to give a month-by-month or quarter-by-quarter burn rate as we start phasing down. And of course, our partners Tullow have announced to the market they're doing a simplification process, and the G&A expenses will be coming down commensurate as well. But none of those are definite yet. Tullow's still in the middle of their process. So again, I don't like being vague about this, but the honest answer is that we don't have hard data on those, and that we are making decisions as of now that are going to affect the future budget. But the contingent items in the second half are basically stuff we would like to do, and I think it's too early to say, how much, if any, money we would have to raise to do those contingent items. But we will come back with advice on that in the second quarter.
Okay, and in terms of looking for a industry partner, is that in conjunction with the operator, with Tullow, or is that separate to the operator?
So that's just Africa Oil looking for an industry partner. Tullow, I think I won't speak for Tullow on this call, but certainly the recent public disclosures of Tullow indicates that they are not actively looking for a partner.
Okay, and last question, any delays because of cross-border production from Uganda or Ugandans tying into, call it the hub and sort of main pipeline infrastructure? How does that impact your equity being only in Kenya?
Well, I think, it's a goal of both host governments and all of the upstream partners. We are in a group with Total, CNOOC, Tullow, and ourselves, and our goal is to build a joint Kenya-Uganda pipeline. it certainly is the most efficient way to go, and I think that is our primary objective, is to build that joint pipeline. So I think that's what 100% what our focus is right now. If there comes to an impasse to where that can't be done, I think the Kenyan government has stated publicly that they would consider a Kenyan-only pipeline, and at that point we'll look at that as a Kenya-only partner. But I think that at this point I think there's a much higher probability that the Kenya and Uganda partners and host governments will be able to come to an acceptable arrangement to build a joint pipeline, and certainly from a financial standpoint, it is by far the most efficient way to go.
Okay, thanks, Keith.
Thank you. The next question is from Shamin Amini from TD Securities. Please go ahead.
Thank you. Hello, Keith. Hello, the team. Cool thing. A couple of questions. The first one on your preferred option of bringing an industry partner. Do you have any concerns about the time it may take the Kenyan government to approve that, and other things that you could do in advance of announcing a potential new partner? And the second question is on Ngamia 7. Can you just give a ballpark figure for what could be the potential addition to the in-place volumes on the back of that result?
Yeah, I guess the first question is I'm not quite so concerned about delays over approval of the Kenyan government. I mean, the companies that we would be bringing, the companies that we've had, some preliminary discussions with, we would be very substantial companies that I think the Kenyan government would be quite happy to see come into the country. So I think, the list of people that we would put as our first preferences would be ones that we think would be quite acceptable to the Kenyan government. And I think, as far as timing and potentially bridge financing, if it extends, again, I think we would rely on being part of the Lundin Group to take care of bridge financing to the point of closing that deal. So again, I'm not that concerned about that. Ngamia 7, I don't think we're allowed publicly to state what our opinion of the resource adds are by NI 51-101 guidelines. Maybe Nick or Paul, if you have any other advice on that. But I think it's a big area, and I think when we go back to our reserve auditors, we'd expect to see a significant increase in that field area. And I think just to be clear on resources, it's really a combination of a number of things. If you look at the slide in the pack, we've got 2C of about 616 million barrels and 3C of about 1.3 billion barrels. If you take the difference between the 3C and the 2C, about half of that is kind of aerial. So just by drilling wells in different areas of the fields that haven't been penetrated so far, we can potentially add that in. And I think that's where Ngamia 7 really comes in, that we're now adding a new area onto that field that wasn't probably even in that 3C number before, that this is actually prospective resources above and beyond that. So I think adding area, Amasing 3 is going to do that. Amasing 4, if it's successful, is going to do that. If Acalus is going to do that. So all of those things are going to be adding resources by extending the aerial extent of the field. But I think almost as important are the reservoir parameters that we're talking about. SW, which is not a kind of a sexy parameter, but if you go from 50% water saturation down to 35% water saturation, you're adding a significant 30% onto your oil in place number. So all things remaining equal, you will add a significant number of resources by refining and improving that number. Recovery factor, which has always been an issue. I think the extended well tests are going to be key to getting our reserve auditors comfortable with what we think a more normal recovery factor, say in the 30s percentage, is going to be. So I think at the end of the day, when we get all of this information together, we sit down with our reserve auditors, and the preponderance of positive information that we're seeing and hope to continuing to see, all of that's going to impact our resources. So we believe we're going to see a significant increase in our 2C and our 1C resources when we do our update. But at the end of the day, we have to convince our auditors of that number, and I'm a little hesitant to start throwing out numbers until we've completed that procedure.
No, that's a very fair point. Thank you for that additional color.
Okay.
Thank you. The next question is from Al Stanton from RBC. Please go ahead.
Yes. Good evening, folks. Most of my questions have now actually been asked and answered, but there was your comment about cost recovery in the pipeline. I'm assuming that is just pipe facilities immediately adjacent to the field, pump facilities, spur lines, things like that, not the actual trunk line.
Yeah, generally under the PSAs, you would recover if we don't own the pipeline, and you can do this either way. In some areas, if the upstream partners own the pipeline, as happened in Sudan, they cost recover the pipeline through their cost recovery mechanism under the PSA, and this is the export pipeline I'm talking about. Until it's recovered, and then of course once it's recovered, it becomes property of the government. That's the way they did it in the Sudan, and that's a fairly common way to do it around the world. The other way, in which I think so far the preference of the Kenyan government has shown, is that there can be a pipeline company set up in which the host governments can have a significant stake, and the upstream partners may or may not have a stake, depending on whether they want to or not, and then they just charge a tariff. And so under the PSA, the tariff generally is treated as an operating cost. So you just recover the tariff, the cost of the tariff under the production sharing contract as an operating cost. So I think those are the things that need to be worked out on the commercial arrangement. One way or the other, you recover the cost of the pipeline, but whether it's a capital cost or an operating cost, those are the type of things we need to work through with the Kenyan government.
And in terms of, I assume Freudian slipper. I presume Africa Oil doesn't want a direct stake in the pipeline, but actually, do you have to take a view as to what a bigger company might want to do?
Yeah, I would say, fundamentally, we don't seem like we want to be part of a pipeline owning company, but I think your point's exactly right. That if one of our main objectives is to bring in an industry partner, certainly the bigger industry partners that we're considering would be potentially keen on owning the pipeline. So I'm kind of hoping we don't have to make that decision right away. I think having some optionality to see what a pipeline looks like and be an owner of a pipeline. One thing I would say is that from a financing standpoint, pipelines are probably one of the easiest things to finance. It's a utility type rate of return, and we've had preliminary talks with banks, and getting 80 to 85% debt financing on a pipeline is not out of the question. So I would say that while our preference might not be to be a pipeline owner, I don't think we want to close that door until we've kind of considered all options.
Cool. Okay, thank you.
Thank you. We have no further questions at this time. I'd like to return the meeting back to Mr. Hill.
All right. Well, thanks everybody for calling in. I know these are tough times in the industry, and we're all suffering equally. But I have to say, you can probably tell from the management team, we're very excited about the Lokochar play. We keep seeing the project looking better and better the more data that we get. We're quite confident we've got a development project coming together nicely, and we think the principal questions that remain to be answered will be answered by, say, the third quarter of this year. And I hope that oil prices follow us in the third quarter and firm up by that time, because I think at that point there's going to be a lot of big companies who've slashed their capital spending who are going to be looking around to figure out where their next big oil development's going to be, and I think we want to be sitting there primed and ready when that happens. So again, appreciate everyone's time, and look forward to another update as we continue to move this project forward.
Thank you. The conference call has now ended. Please disconnect your lines at this time, and we thank all who participated.
Welcome to the instant replay system. Pour continuer en français.